Hello, and welcome to our new video. Today, we will try to understand the finer aspects of what is for most of us one of the most important financial decisions of our lives. That is, buying a house. After food and nourishment for sustenance, shelter is the most basic human necessity. However, unlike in the past, when having a house meant building a house with one's own resources, today we have a huge variety of options, in type of accommodations and modes of ownerships that we can choose from, thanks to the innovations in construction and financing of homes. On the other hand, the sheer intricacy and the plethora of options, has also blindsided us, such that, very few amongst us can actually see the complete picture, and make a decision that is best for us, and instead, end up making these decisions, based on generations of conditioning, the marketing forces, or government schemes and incentives, usually framed under the influence and pressure of lobbying groups. With this in mind, let us make an analysis and comparison of a decision of renting versus buying a house in today's context. For this, we will take an apartment worth 50 lakhs as a basis, and build a comparative case. To gauge the exact impact on your own self, you can later substitute these values, rates, and costs, applicable to the conditions in your area, and make an analysis tailored to your country, state, and location, to make your own individual analysis and decision. This basic cost of the house is the share of your expenditure on acquiring a house, which you pay to the seller of the property. Even as the seller will get this in his bank, the buyer would end up paying much more by the time they take possession of the house. These additional costs include duties and registration, service tax, value-added tax on new property constructed and bought from a builder, brokerage, tax deducted at source, etc. These add up to about 10% of the seller's price, after including which, we arrive at the money that would be shelled out by you, as a buyer. This money can either be provided by your savings, or by taking a mortgage or a loan, from a bank, or a financial institution. If you borrow, then you have to pay interest, which is a cost for you. Even when you fund this money out of your savings, it still carries a cost, as you lose the opportunity to earn the income you would have otherwise received on your savings, which you had to liquidate to buy the house. With this as a starting point, we can now proceed to see how much we spend as a homeowner every year for owning that property. The first, as we discussed, is the actual interest payable on loan, or the opportunity cost of interest lost on savings. Then there are components like the share of property and facility maintenance costs, paid to the apartment society, or the owner's committee, cost of general repair, upkeep, and insurance, municipal and property taxes on the property. With these taken care of, we cover all the major components of annual cost, which one has to bear as a house owner. While a person who rents or leases such a house is spared all these costs, but they have to pay rent, which would apply to a property of that value, in that area, and also, most of the times, the brokerage for the rental agreement. Now, if we compare the two, we see that comparing the pure outflow of money from bank, the leaseholder or a tenant, makes some saving by being a tenant, as compared to the owner. While this takes care of the revenue outflow, property ownership also comes with the advantage of owning an asset, which appreciates in value as time goes by. Based on the data available currently, the property rates are seen to be stagnant all over the country. As a matter of fact, except for 3 pockets in 3 cities in the country, property prices have either remained stagnant or fallen. This situation is not supposed to change drastically anytime soon, given the current economic outlook. For the sake of our analysis, even if we take a 2% growth factor, and apply this to the owner's share of the price of property, because all other elements of purchase price go to government or other parties, then we see that the value after time appreciation barely goes above the price that we paid at the time of purchase, after we include the other costs and taxes paid at the time of registration 5 years ago. This increase in value is called capital gain, and is subject to a capital gains tax. If we consider the real cost of properties in the prevailing market, then we see that property owners have, in fact, seen a depreciation in the value of homes. On the other hand, if we consider a scenario where as a tenant, an individual sets aside his annual savings, then they end up with a substantial surplus over the same time period. As a matter of fact, if an existing property holder had sold their property, and invested the proceeds of their sale, at 8%, then, 5 years later, they could have bought back their property, even if at a slightly higher price and the incidental costs applicable, they would have ended up making a substantial profit. Now, we need to understand the importance of this annual saving, which one makes as a tenant, as compared to being a house owner. This in effect means that you have more disposable income every year in your hand, which translates into a higher standard of living for you and your family. You can afford better quality education for children, afford to pay a higher premium on life and medical insurance coverage, buy better quality goods and afford higher quality of services in your life, have more money to save and invest, and generally enjoy higher quality of life. When you are not tied down by a property, you are far better prepared, logistically and psychologically, for change. Like when you get an opportunity to move to a new country, or a new city, for advancement of your career, you are more likely to take it, and move, when you live in a rented house. Sometimes, when you need to change your office within the same city, you cannot move accommodation as easily, and save on the cost of commute to the new office or the stress that comes with it, when you are a house owner. On the other hand, someone renting can consider such a change far more easily, and avoid the stress and save on costs. Likewise, if changes in the nature of your neighborhood, or your own status in life, necessitate a change of the area you live in, it is a lot more easier to make that change when you are renting. Another effect of house ownership is the fact that when you have a big mortgage to pay, you become more averse to taking risks, and instead, get into the middle-class mentality of buying to the system, to keep the mortgage payments coming. The right way to look at buying property is to find a place which you would like to live for a long time to come, and maybe even retire at. A place, the thought of returning to which, makes you fill up with excitement and peace. For most people, buying property is once-in-a-lifetime decision. To buy property at an early age means you end up buying property you can afford at that point of time when you are not necessarily at the peak of your earning capacity. It makes more sense to identify a place you would like to live in, much later in life, and in doing so, look for places that are not expensive now, but have potential, and slowly invest in it, over a period of time, and to which you can move into later. It can even be in form of upgrading an ancestral home, or buying a shack at a secluded beach somewhere, or even a place in a different country. In bad economic times, there is an added dimension added to house ownership. In a recession, when you lose a job, or your income shrinks, the mortgage installment payments do not stop. In such a time, if you tried to cut your losses by trying to sell your house and move to a more affordable place, it is not only difficult to find a buyer in a bad market, but sometimes you may even be forced to take a huge loss. Being a tenant, on the other hand, makes it easier to move to a more affordable place, and, as a matter of fact, a bad economy may even work to your advantage, as rents also get lower. Another common feature of recession is the fact that builders are unable to deliver the house or apartment on the promised time, so while you pay the bank through your nose, you are unable to get your house, and bleed money. In bad economic times, builders going bust is also a huge risk, which can lead to your investment in property getting sunk, if your realtor goes rogue, or insolvent. For this reason, it is very important to consider all the factors, and the times we live in, before taking such a vital decision, which can make a seminal difference in how you will live your life for a long time to come. It would be advisable for you to consider the approach we have taken in this analysis, and substitute data, like the house values, investment return rates, housing market conditions, and costs and taxes, applicable to your country, state, and city, and make a cost-benefit analysis, before making any major decision, especially in view of the direction the economy is headed, both locally, as well as globally. The analysis in this video was inspired by the post, Fools Buy. How it is much smarter to rent rather than buy expensive stuff in life, from the blog, Reading Between the Lie. You can find the link to the blog post, and also the Hindi version of this video, in the video description below. We hope you found this useful and enjoyable. If you did, please click the like button, and also share this video with your friends, who might find it interesting. To see more of our videos, you can subscribe to our channel, and select all notifications icon, to get notified whenever we upload new videos. Until we meet again in the next video, have a great time, and take care.